Welcome to Stock Watch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today are Ricus from PSG Hole-in-One Ruimsig and Mark Du Toit from Oyster Investments. Be sure to send your questions through via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, gents. I am quite perplexed at the U.S. markets, seeming that they are struggling with direction today, Mark, even though we have had earnings beats from yesterday when earnings season kicked off. Everything seems so strong. What is happening at this point, considering also yesterday's strong session?
Yeah, well, we've had a very volatile start to the year. I think there is a lot of uncertainty at the moment. We need to know, we'll have more detail on what the planned introduction of additional tariffs are going to be in the US. I mean, Donald Trump has spoken a lot about how aggressive he's going to be on tariffs, but we know that that's probably an opening negotiating type stance, and that the ultimate tariff increases will be a lot more moderate. But that is a big uncertainty, which is difficult for the market to price at this point. It's difficult to run a business when you don't know what the rules are. So until we get clarity on that, I think we will see the market go up and down a lot. Yeah, I mean, the moves around the jobs numbers when they were published, and then subsequently the inflation rate coming out as expected, and the market really quite volatile around just the normal macro announcements. So yeah. I think the market's looking for direction, and until we get a bit more clarity and a bit more liquidity back into the market, I think it's going to be up and down for a bit.
Yeah, we're just waiting for Ricus to sort out that connection that seems to be off at the moment. It's just a circle there. But Mark, just as we're talking about those the US markets, I mean, if you're invested right now in US markets, is it a good time, and is it going to be a good time for a while, considering you mentioned the US jobs numbers, considering how strong the US economy is, and also just the evidence that we're seeing with these company results?
Yes, the US economy is strong at the moment. I mean, they're expecting 2% GDP growth. Inflation is under control at this point, and rate cuts are still on the cards. Unemployment rate is very low. So yeah, the US economy, the local economy looks strong. But I mean, when you talk about being invested in US stocks, a lot of investors are invested in the big tech stocks, and they've had a fantastic run over the last few years. The prices have gone up a lot, and there's a lot baked into those prices. So any kind of negative news on the interest rate front, or even global currency moves, that will impact their earnings. So yeah, it's a bit more difficult to say whether they're in such rude health as the general economy in the US.
And I mean, listen, a lot of investors flocked to chip makers. We did have TSMC also today coming out with an earnings beat. As much as, of course, there's a lot of froth on these companies, would you say that it's justified considering the fact that they are still delivering?
Yes, so TSMC's results were very good. NVIDIA's results have been very good. So at this point in time, I mean, I would still say that NVIDIA's share price looks very stretched to me, but yeah, in the short term, they have been delivering. But they are baking a lot of future earnings, and time will tell whether that comes to bear.
All right. Well, let's take a look at some of the questions that have come through for us, Mark. Quite a few questions when it comes to African Rainbow Capital, and of course, I guess the big focus there in that stable is Time Bank. So let's let's get to this first question. This one is basically a comparison between African Rainbow Capital and Reinet. Of course, we know the corporate action that they've taken now to exit their exposure to British American tobacco. So the question goes, which one presents the best opportunity for the long term? Are they comparable, Reinet and African Rainbow Capital?
So there are two very different companies. Reinet is well now left with its stake in Pension Investment Corporation, which takes pension funds off companies' balance sheets and manages it. So, I mean, we like to think of them as kind of a fixed income manager type business.
Okay.
And then they used to have the big investment in British American Tobacco, which is now a large pile of cash in their hands. And there isn't clarity on what they're going to do with that money. I mean, are they going to use it to expand the PRC business, or are they going to use it to buy something else, or are they going to distribute it to shareholders? So there's a lot of unknowns. It's probably a positive move. As long as you're comfortable with the underlying business in Europe, and I think they have done well, and will continue to do well. So I think the investment case is fairly strong for Reinet. And then African Rainbow Capital is very different. So they are an investment holding company. They've got investments in various businesses in South Africa mainly. And one of their big growth opportunities is their investment in TymeBank. And then there's also some further complication in that how it's structured. There's a South African TymeBank entity. There's an entity listed well, not listed, but based in Singapore.
Yeah.
And there are different structures around that as well. So it's quite a complicated holding company to value.
But also, I mean, with that, because now TymeBank also plans to list, I think, is it in 3 years' time, in 2028. Should one, or, I mean, if they're holding African Rainbow Capital with the hopes that TymeBank will list in 2028, would that be a good idea for an investor to hold on to that with that kind of potential corporate action coming up?
Yes, I mean, usually that is a good opportunity. Company that's being, and I'm not sure if they're going to spin it out of ARC.
Yeah.
That's also a question, or if it will list and then ARC will retain its shareholding or take a portion of its shareholding. So we don't know that detail. But in general, I would say that is a positive move. I mean, we don't, of course, it is the intention to list at some point, but there's no detail around when and where and how.
All right. Well, just lastly on that, there's a question here. It was 2 nights ago, Grant and JP discussed the investment by Nubank in TymeBank. Please ask your guests to give their thoughts on Sanlam and its investment in TymeBank. Of course, they have acquired a 25% stake in African Rainbow Capital Financial Services, which then controls ARK Invest. What do you think of that arrangement?
Yeah, I think it's interesting. Sanlam has made a number of investments and acquisitions. I mean, they've been quite acquisitive. So I think that it is kind of a strategic, or maybe a first investment that they've made in TymeBank. I mean, there is a lot of opportunity between the two businesses. There's a lot of overlap between insurance and banking. TymeBank has a very fast growing and quite a large customer base already. A lot of accounts have been opened. And then it's a case of, once you've got that customer on your books, how do you introduce product to them? It could be a sales channel for Sanlam. So I think that it is an interesting first foray between Sanlam and TymeBank, and we'll see how things progress from there. But I mean, it is a small part of the overall Sanlam group at this point.
Yeah, I mean, as much as it's a small part of Sanlam group, but you are kind of seeing their thinking for the future at this point. I mean, would that kind of thinking be the reason for one to also go into Sanlam, and maybe thinking of it as maybe one of the insurance counters with maybe the most growth potential?
Yes, certainly. So I do think that Sanlam has a lot of growth potential. They certainly have a lot of irons in the fire, a lot of investments in South Africa and offshore as well. So yeah, I mean, Sanlam is one of the insurance companies that have those growth optionality to them. The other insurer, of course, which has a lot of growth is, of course, Discovery with its life business, healthcare business, banking business. So that's also one that you consider if you're looking for an insurer with growth options.
All right. Ricus, are you back?
Well, I hope so.
You've
This is
joined
Plan B on my phone. I hope you guys can hear me and see me.
Yes, we can see you and hear you perfectly. Let's just catch on because
Okay.
we've been discussing Time Bank and really just their potential, because Sanlam has also invested, well, an Ark Invest rather, of course, with the big focus there being a Time Bank, with Sanlam's investment there, but also just as a long-term investment. What would you make of that? I do remember towards the end of last year, the share did go up quite a bit. I did see some pressure though at the beginning of this year. But has your view changed or shifted in any way on Ark Invest?
Not really. In other words, if I still think it's a fair hold at the moment.
All right. And then also, Ricus, just also your thoughts on Reinet, because there was a comparison, or rather a question that was asking where the most growth potential is, long-term growth potential between African Rainbow Capital and Reinet. If I'm correct, do you own BAT? Why do I think you own BAT?
No, I don't have BAT. I might use the product, but I don't own it. Yeah, well, I think we need to see what Reinet's going to do with the funds it's received after the selling of British American Tobacco, and that is also coincidental with with the change in the guard, with Johan possibly retiring. So there is a war chest. We don't know what's going to happen as far as Reinet's other investments are concerned, whether it be their pension fund management business in the UK, and their property and also private capital. I mean, we all know what those are, and they've been pretty stable and pretty good. Not huge growth stories as far as I can see. But with Reinet, we'll have to see what the plans going into the future is. Whereas on the other hand, we already know what African Rainbow Capital is all about.
All right. More questions. Let's start off with Cashbuild. Can your panel give their view on Cashbuild for the year forward? The share has run hard, and if we expect a growth rate of 1.5%, I think we can see a further price rise in the share. Yeah, the most optimistic views about our economic growth for 2025 being about 2%. Mark, do you think that this is what Cashbuild can eke out gains from?
Yes, certainly. So, I mean, a good macro, a good GDP print will be positive for retailers, and Cashbuild is a retailer in the building space. They've done very well in the past when there was a lot of competition in the cement market, and the cement suppliers were trying to sell discounted product through Cashbuild. That was kind of when they had that really fantastic period of earnings. And they also did very well when everybody was out doing small renovations to their homes. So those are the kind of things that really drive Cashbuild's numbers. But yes, I think if we see people earning more, people building more onto their houses, doing small renovations, it's all positive for the business. I'm not sure that they're going to really shoot the lights out like they have done in the past, but certainly a positive macro print is good for Cashbuild.
Yeah, I hear you on that point, Mark, especially because we are seeing a recovery of market activity in the housing, the residential property market as well. Ricus, I'm just thinking though, because I mean, both Cashbuild and Italtile have spoken about intense competition in that market. They're talking about a predatory price environment. Do you think that it can still thrive even with that?
I'm completely biased. I've got Cashbuild in my personal portfolio, bought it about 175 Rand. And it got to my first target of 225, and it's now sort of consolidating. I'm still positive, though, let's try not be biased going forward for all the reasons you mentioned. I mean, they need a 7-10% earnings growth to maintain their current price earnings. let's say, and technically, I mean, it's got a much higher target. I mean, I don't come and crucify me if it doesn't get there, but I've got about 280 Rand easily on this, which is why I'm holding it. But I think it's perfectly positioned for any type of, real growth as far as local business is concerned.
All right. Well, let's get to commodities. Sibanye Stillwater. Should I continue to hold Sibanye and increase my holding, or should I sell? Actually, yeah, what is the outlook for the PGM stocks this year, Mark? Because there's just been no light at the end of the tunnel.
Yeah, so it's been a very interesting ride for our PGM miners. I mean, they had fantastic pricing environment 2 years ago. The rhodium price went up to $30,000 an ounce, and it came all the way back down to $4,500 an ounce. And the PGM basket, being platinum, palladium, and rhodium, collapsed. So earnings have been under pressure for almost a year and a half, almost 2 years.
Yeah.
And we're still waiting to see any kind of meaningful move in that PGM price basket. There's been a lot of written about how there's a deficit in the platinum market, so there's more demand than supply. But really, we haven't seen that translate into price increase in the platinum price yet. So I mean, we might be getting closer to a turning point.
Yeah.
But at this stage, like I said, I'm not seeing that yet. We also, it's driven by vehicle sales, the amount of catalytic converters that are sold or produced. And you have to also take into account whether you think EVs, battery electric vehicles, are going to take more market share away from ICE vehicles. All those things come into play. Sibanye is also going to print pretty difficult or pretty dismal numbers now in their update. I mean, this price environment isn't healthy enough for them to make any meaningful profits. So it's going to be a difficult update, but they are very leveraged to the prices. So any increase in platinum, palladium, rhodium, any Rand weakness is very positive for the earnings numbers.
And actually,
yeah, I'm not sure I've answered the question, but it's an interesting,
yeah.
it's an interesting setup. I think that it could run hard, or it could just do nothing for a while still.
I mean, you've given us important bullet points there, and it's going to be quite interesting to see how investors react to those numbers, to see if they have baked in all the bad news or maybe not. Ricus, your take on Sibanye Stillwater, because that chart is still not looking good.
No, it's not. Just to start off with, Mark said about the metals prices of the stuff they produce. That's still very much sideways, and that would, and any increase in the dollar price of palladium, platinum, whatever, will help all of those counters. But it's quite interesting if you take a look at the year-on-year performance of Sibanye in the top 40. It's dead last versus the all-share index. Guess what's fourth from the top? Implats.
Yeah.
If you've been in Implats for the past 12 months, you would be smiling. Gives you an idea of the problem with Sibanye, and that's an operational problem. So yes, let's see what they report, how much of those problems are being solved, and that might provide a boost to the share price. But it's a 50-50. If it disappoints, we know where we are, because we can see over the past 12 months how the troubles have affected the M share price.
Yeah.
So I certainly won't buy more at the moment. And again, depending on the questioner's holding and what part of its assets it forms, if it's a substantial amount, don't go and throw good money after bad money, because we already know what's happened over the past 12 months.
Yeah.
But I would adopt, if it's not substantial, wait and see how the market reacts to the news, rather than put your own thoughts into what the price should be doing. So if Sibanye starts playing catch up with the other platinum counters, whether it be Northern Platinums or Impala, as I've just mentioned, maybe a trading opportunity. But that whole sector needs a boost from the physical commodity side.
Yeah, all right. Mark, you were talking about the cars, and there's a question on combined motor holdings. We get the question back. View on combined motor holdings at these levels as a long-term investment.
Yeah, I certainly like the brands. I think Suzuki, Haval's been doing very well. So I think that they are well placed in that regard. We are seeing a lot of Chinese vehicles entering the market now, so it's that is going to impact local sales. Unsure what kind of how that's going to change the market in South Africa. It's not expensive. So yeah, I think it's a fair prospect, but I would be a bit worried about what the new vehicles and the new brands entering the market are going to do to the market share of the incumbents. I think that is quite a serious risk. But you're not paying a very expensive price for the stock, so perhaps it's already baked in.
CMH, Ricus, or maybe Motus, also if you want to put that into the equation as well.
Let's leave Motus aside for the moment and talk about CMH. And the reason why I want to leave Motus aside is because looking at CMH, it's a well-managed company in an extremely difficult sector at the moment for all the reasons Mark just mentioned. The whole environment as far as motor vehicles are changing. And it's volatile because you'll get a week of, oh my gosh, EV sales are slowing, and then all of a sudden, but China is exporting everywhere. So it's a difficult and changing market environment. I'm quite sure that CMH's management will be able to navigate. But in this kind of uncertainty, do you want to be in a well-managed company in a very uncertain environment? And I'd rather not be. I'd rather be in something that I have far more confidence in the future developments as far as the industry is concerned. So despite being the fact that it's cheap on a valuation basis, I think it's still got a very decent dividend yield. You're sitting with a stable company in a very volatile market. It just doesn't make sense to me. I'd rather be in a stable growth-orientated company than something like CMH.
All right. Well, gents, let us get to your stock picks for today. Mark, what are you choosing?
Yes, so I'm choosing Anheuser-Busch, the largest beer company in the world. It earns 30 to 35% of its EBITDA out of America. It produces a lot of its beer in America, so I think that it will be a beneficiary of kind of the America First agenda that the Republican Party is going to be pushing. Its share price has come off quite a lot last year. There are concerns that beer sales will be impacted by weight loss drugs, those kind of things, that millennials aren't going to drink as much beer as the current population. But I think that that's fairly already priced into the share price. Its cash flows are great. It's busy paying down debt. It's doing share buybacks. So I think that you're paying a price for a really great asset, a global beer company, and it's going to also benefit from local US changes to tax legislation, to tariffs. I think is one to invest in now.
Yeah, all right. Ricus, what are you betting on today?
It's an American company called Lululemon. They specialize in sportswear. 80% of their market is in the US, 20% overseas. Their plan is to increase that overseas component to about 50% of their market. The second thing is that they basically not as dependent on wholesale. They sell directly to customers. In fact, their e-commerce site is double the size of its nearest competitor. Very strong balance sheet, so that expansion that they're planning can be funded. There's no need to go and look for cash. Prices come off quite a little bit over the past 12 months, showing signs of recovery. So yeah, growth prospects going forward, and not a bad looking graph. I'd wait for it to get above $420 per share, but easy upside to about $500.
All right. Well, thank you so much for your time and for your analysis today, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guests, Ricus from PSG Hall-in-One Ruimsig and Mark Du Toit from Oyster Investments. Up next, The Close. Stay watching.